Hey guys, this is Market Update. In this video, we're going to look at some longer term analysis and predictions for Bitcoin's growth. You may have seen a lot of price predictions out there. I've actually plotted them all on this same graph, so we can actually have a look at them together. You may have seen stock to flow and power law floating around. Fidelity give very detailed predictions as well. Saylor has, and I've put my predictions on here because if we're invested in the asset, we need some predictions, right? So we're going to look at that in this video. When it comes to Bitcoin right now, look, we're just still in this pattern. Like all of the attention towards crypto is totally gone right now. All of that attention, all of that buzz, it is out the window. There are many other things that are more important right now. And I just think towards the end of this year or maybe next year, you might start to see some interest again. But even though we're in this pattern, like 50 to 70 and just not anywhere near breaking out, you know, price is fairly positive, right? We had that big wobble here and we've recovered all of that and we've put a very good green week in this week. So I think we're just still in this holding pattern and this may go on for a lot longer. This is when long-term investors actually make money because you're investing when the market isn't trying to pump the price up. So that's where you actually accumulate Bitcoin, right? If you do want to accumulate Bitcoin or when you trade Bitcoin, check out Bybit. Link down below, you can get a deposit bonus if you're new on there. Just click the link to find out the details. Up to $30,000 as a deposit bonus. The first model we'll look at is stock to flow, which was popular in the past, kind of got broken last time. Some people still use it. Essentially, this is looking at the supply side. Stock to flow usually is a commodities valuation model. So stock is the amount of a commodity in existence and flow is the amount that you can find each year to add to the supply. Now for Bitcoin, we know the stock and we know the flow forever, right? So you can use this model and extrapolate it out. Now, this model is giving us some wild price predictions as we get more mature. And of course, these get kind of less accurate over time, right? We can see that actually. So the average price that we're looking at here, this is a price average and then the stock to flow model, which is also looking at an average price. So the average price of last cycle was 34,000, stock to flow had it around 50,000. Look, all of these models, right? All models are wrong, some are useful is the saying. So none of these are attempting to be perfectly accurate. They're just trying to give you a model that you can try and get a valuation framework off. In any case, look at the stock to flow model for this cycle. You're looking at an average price of around 477,000, and then the next cycle is 4 million. Okay, this is where I think it gets a little bit crazy, going from 400,000 to 4 million. You're looking at Bitcoin taking over a vast majority of the world's wealth. I don't think it's going to do that. But look, stock to flow is here and it is by far the most punchy model. You're looking at this red dot up here around 400K for this cycle. And then we're looking at the next cycle around 4 million. I haven't even plotted the next one because yeah, it's just crazy. So that is, you know, pie in the sky. If we get there, hey, great news. But look, it's wild. And you're looking more at the supply side rather than the demand side. And I just think that personally, it's going to be a little bit wrong, obviously, to the upside, but it is a model and it's looking at the supply side for Bitcoin. You know, we know that. And if demand continues, it's plotting that, but it's starting to get a bit wrong. And as the, you know, asset matures, I think 4 million is going to be way wrong in one cycle's time. The next model, which is actually gaining popularity at the moment, is the power law model. So again, what I'm going to do is link the Twitter accounts and some of the articles about these models down below so you can actually research them more and see the details of them. It's too much for this video, but a power law is obviously something that you can place on something like Bitcoin. So what is a power law? A power law is a mathematical relationship where one quantity varies as a power of another. Now, you should be able to see that the power law fits Bitcoin's price history very, very well. Power laws, as time goes on and as data changes, will actually change their predictions as well. And so this data and this model will actually change over time as price data comes in. And so it should continually track Bitcoin's history pretty well. And so it looks to be a very accurate model of what Bitcoin may do in the future. But we have to go in with the knowledge that it will always look like it does that because as the data comes in, the model actually changes. In any case, we can see a power law here, and there are some price predictions for this. So you can see this over time. We'll screenshot the chart if you want, but 2024 around 300K, 2028 around 1 million, 2032 around 4 million. Yeah, again, probably a little bit punchy, and I've placed those predictions here. So these are the blue predictions. So you should be able to see this. right here. So a little bit less than the stock to flow, but you're still looking at very, very, very punchy valuations from this power law. Now, again, this is, this would be Bitcoin. This would be a collapse in the US dollar and some really massive world event, right? And we should not hope for that. And I don't think that's going to happen. And so you can see how Bitcoin's price is moving within this range. And both of these models are predicting, a wild change in that. So Bitcoin really becoming essentially the money that people use and fiat currency just disappearing. I don't think that's going to happen. I think that's impossible because fiat currency is useful for us. Fiat currency is simply the system of lending, right? Credit. And we all need credit. We all rely on credit for businesses and mortgages and everything like that. Credit isn't going away. Fiat currency isn't going away. And so I don't think it's collapsing. And so these models, I think, are just massively over-egging the potential price that Bitcoin can get to over the short term. Next, we have the Bitcoin adoption curve model from Fidelity. And this is something that is up my alley a little bit more. So really simply here, you have an adoption curve for the asset. And that adoption curve is the curve of non-zero addresses. So you have Bitcoin non-zero addresses. And if you can just see that here in the purple, these obviously can be counted. And so you can plot them on a graph. And then what you can do is just simply have a kind of regression of that growth, right? So that growth obviously is very fast. And as the asset matures, the number of non-zero addresses still grows, but that growth rate slows a little bit as it reaches maturity. But they've plotted this on the graph, as you can see here. And then the black is the Bitcoin price. So this inherently makes sense. As the asset grows and as more people adopt it, the valuation grows in relation to that adoption. Now, the price is volatile, and so you have areas where the price is obviously very high in relation to that real adoption, and then pretty low in relation to that real adoption. And you can just plot that and kind of extrapolate it over time. So I've put this on the chart as well, and this one is much more normal in terms of the price predictions here. So this is purple, and I've gone out to these other cycles. So what I've done here is extrapolated Bitcoin. This is the Bitcoin chart on a log scale. And just my usual chart is that I put essentially 3 lines here. This is kind of the midline, upper line, lower bound, right? So bear markets sometimes come and touch this lower bound. Bull markets, sometimes the price touches this upper bound. But generally, you want to kind of fit the mid-range, which is this orange line that goes through. And these blue lines here are the halvings. And so what I've done is just taken next cycle, right? Because we're already in this cycle here. So for Fidelity, the next cycle, so this Bitcoin halving around 2028, Bitcoin usually tops out after a halving, maybe a year or so. So that's why I've put these lines here. So this halving here in 28, and then the 2032 halving right here. So Fidelity around for a 200K for the 2028 cycle, halving cycle here, and then for the 2032 halving cycle around 400K. That's based on just this extrapolation right here. So this actually seems a lot more normal as a price prediction, right? What you're saying is the asset continues to grow, and these are the kind of prices we would assume based on the fact that the price has oscillated around this adoption since its history. So you can just extrapolate that out, right? Now, Bitcoin as addresses are going to be less informative over time, because what you're seeing is the asset really proliferate now. And so a lot of people own Bitcoin in ETFs now that they didn't before. If you wanted Bitcoin before, you may have held it on the Bitcoin blockchain. Nowadays, you have large institutions who, maybe have, let's say, 15, 20, 100 addresses, but that could represent thousands of investors. And so, the adoption curve with non-zero addresses, you could say, well, maybe it becomes less relevant, but I still think it is, because addresses will continue to be created as institutions create them as well. So I actually think this adoption curve is something we can really look at. And I think the price predictions are not outlandish at all, right? You're looking at 200 to 400K within the next 8 years as a kind of average price for BTC. Then we come to Michael Saylor's predictions, and he's actually just taking an ARR of the price of Bitcoin. And ARR is an annual rate of return. And he's not looking at power laws or anything like that, just looking from a very simple financial perspective, which I, having worked in finance and gone through a lot of equity valuation models and growth models, I find very relatable. Essentially bear, base, and bull cases, right? So his base case is the ARR of Bitcoin over the next 21 years would be an annual rate of return of around 29%. Now the bear case is 21% and the bull case is 37%. However, that's in dollar terms. Now the dollar gets debased by about 7 to 10% a year, right? So if the dollar is getting debased by 7 to 10% a year, what he's actually saying is that the real rate of return, the RRR for Bitcoin in the bear case is 11%, because you have a fixed monetary asset. Now Bitcoin does have some inflation, but it's what, like, not even 1%, right? So compare that to the dollar. And so take 11% off, take 7 to 10% off or 10% off, you're looking at 11% real growth rate over and above currency debasement, because Bitcoin will price in that currency debasement because you have a debasing currency dollar versus fixed currency Bitcoin. It prices that in, just like property prices it in, just like equities price it in, right? So the real rate of return would be 11% for BTC. Now that doesn't sound too outlandish, does it? Because you have a network here and an asset that is actually growing way faster than that, genuinely, in terms of the adoption, right? And so an 11% real rate of return each year for the next 21 years doesn't sound massively outlandish, right? And so maybe the base case doesn't sound that massively outlandish as well. So when you put that on the chart, what I've done here is just taken a kind of average rate of return over the next couple of cycles for Saylor, and I think I plotted it around 500K or so. That would be after the 2032 halving, and maybe you get a top there if these cycles still persist. So again, just plotted with the others, you're looking maybe around 500K in 2032 or 2033, something like that. Again, that doesn't sound too outlandish. If you really understand how assets actually give returns, the S&P around 10, 12%, the NASDAQ around, let's say, 18% or something like that, Bitcoin should have more growth than those. And so it should outperform them over the long term. So these price predictions here, you're looking at by 2045, 3 million to 13 million. Look, it's very wide because it's an unpredictable asset. But if Bitcoin continues the adoption that it's had, even slowing down significantly, these are not outlandish price predictions. The price curve that I work off is much similar to Michael Saylor's, which is I'm just looking at general yearly returns, and I split that up via cycles. So this is the Bitcoin price in black, and then the CAGR, which is similar to ARR. So it's a compound annual growth rate. It's a 4-year CAGR. So you take the price, this was the price 4 years ago. You can see this blue line here. Essentially, if you're a long-term investor, this is the annual rate of return that you're getting, right? So CAGR and ARR are very, very similar. This orange line is that CAGR. As Bitcoin is maturing, the price is going up, but the rate at which the returns are coming is going down. So during the previous cycle here, you're looking at a CAGR around 100, 150%, something like that. That's dropped down anywhere to 30, 50. I think we peaked out at 80% this cycle. So just take an average for each cycle. I would presume that each cycle you're going to get the CAGR coming down a little bit and the ARR coming down a little bit, but the asset is maturing, right? So if we assume that the adoption of Bitcoin will continue, and I think that now the institutions are in, and a lot more people are wanting Bitcoin, right? So I'm assuming Bitcoin adoption will continue. And what I've done here is put this cycle at a 40% ARR, and then the next cycle at a 30% ARR, and then the next cycle, I'd probably put like a 25% ARR. The reason why I wouldn't knock it down to 20 is because that's what the NASDAQ returns around 18% a year. And that thing is very mature, right? You're not buying anything fairly new. Bitcoin is a new asset. It's still got a lot of adoption ahead of it. So in any case, 40% and 30%. Now what I've done is really important is not take the price of Bitcoin where it is now, because that is completely irrelevant for long-term investors. If you're a long-term investor, this candlestick price chart is something, it's just absolutely, we're going to take it off because you don't even need to look at it. The real price for Bitcoin or any asset, if you're a long-term investor, is the moving average, right? The 200-week moving average. This white line here is the 200-week moving average of Bitcoin. If you're a long-term investor, that's your cost basis, right? This price chart here is noise, and it's very, very volatile. When people say Bitcoin is volatile, they're looking at the price chart. Of course, what they won't look at is just taking this off and actually looking at the moving average, which is what an investor should look at. Now, when you look at the moving average of Bitcoin's price, this thing doesn't seem that volatile. It's literally just going up and to the right. Okay, so so this midline here, this orange line, you can see that the moving average is actually, the delta is very, very high here, and it's actually moving into it. The asset is maturing. The volatility is coming down a little bit. So volatility is getting crushed a little bit. Returns are getting crushed a little bit. But the maturity of the asset is obviously something that people are really looking forward to, right? Because they're like, wait, this is a mature asset. It's not going away. It has demand. And as more people know that, as more people get in, then your returns are going to diminish over time. So what I've done is taken the moving average price of Bitcoin at this halving, which was around 30K or so. And then I've just put the 40% ARR on that. So that's that green line here. And then taken it down to 30% ARR in this cycle. And you can see that that actually may be how the moving average plots over time. So you've got at the 30-32 cycle, somewhere around 3 to 400,000 or something like that. So again, 40% ARR, 30% ARR. It doesn't sound that outlandish when you're looking at previous growth rates much higher than that. And the current growth rate is like 50% a year, currently around 50-60%. So again, I don't think it's outlandish. That would be something that I would expect if Bitcoin continues its adoption. That's the only question. Is Bitcoin going to remain desirable, and is it going to continue to grow and take a percentage of the world's wealth as a store of value? Looking at all of these price predictions then, it just doesn't matter. These are totally irrelevant. And of course, these are not going to be accurate. These green lines, this is not how the Bitcoin price is going to react, right? These green lines here, we can see the Bitcoin price, super volatile, right? So look at it, right? So it may go up here, it may go down here, right? We know that that's going to happen. But what we're looking at for the green lines anyway is the moving average, which, like I said, is obviously much less volatile and just basically is going up. The real question for an investor, is the asset that I'm investing in going to continue to be desirable over the time horizon of my investment? Second, does it have a risk-adjusted return that is good for me? So not just the return that I'm getting and that I think I'll get, maybe 40%, 30%, 25%, but is it risk-adjusted in terms of volatility? Is it worth it? Bitcoin has been the best risk-adjusted asset of all time, essentially, and over its lifetime it has. So what I would suggest is the question isn't what will the Bitcoin price be in 8 years' time? The real question is Bitcoin going to remain desirable? Is it going to continue to be adopted? And the third one, which is the main thing, how much should I have of it in my portfolio? Because let's say that Bitcoin is becoming adopted and BlackRock will say, or JP Morgan will say when they're selling Bitcoin, we recommend a 1 to 3% allocation. Okay, so if the whole world has a 1 to 3% allocation of Bitcoin and you have a 1 to 3% allocation of Bitcoin, you're making nothing. You're not outperforming anyone because you have 1% and everyone else has 1%, and so you're not outperforming. The way you outperform is, of course, buying the asset that outperforms, and if everyone else has 1%, you're not going to outperform with 1%. Maybe you need 2% or 10% or 100%. If you can handle the volatility. Now that's not appropriate for everyone. So everyone has their own investment needs and cash flow needs, etc. But as a thought process, all right, if you've got an asset that is outperforming and everyone has 1% of it, and so do you, you're not outperforming anyone else. You need to outperform everyone else. And so the real question is like, how much of the portfolio should I put in there? How much risk do I want to take? How much do I really believe Bitcoin's adoption? How much volatility can I handle? Because Bitcoin is way more volatile than these assets. But you can definitely see that Bitcoin is the outperforming asset right here. And it's really a question of how much do you allocate, and are you comfortable allocating more than other people to get outperformance if you think it continues to outperform? I think those are the more relevant questions for real investors. But this type of thing is fun as an exercise. But if we just look at the moving average, I think we assume it continues to go up. So again, it's not really about the price. It's irrelevant, right? It's about the other things to outperform other investors. How much do you have? How long are you willing to hold? How can you trade bear markets when other people are capitulating? All of those things are going to give you way more outperformance rather than trying to invest in much more risky assets, which you hope go up a lot more, but maybe have a way more risk, right? So that's why Bitcoin is that sweet spot. Like I always say, the trade of our generation, it's the sweet spot trade because you have outperformance, you have some certainty, and the outperformance is there if you want to take more risk by allocating more, but that's up to the individual. If you do trade crypto, check out the link down below to Bybit, $30,000 deposit bonus via that link. I'm James, it's Mazzy G. Cheers for watching, and I'll see you in the next one.